Today, I would like to take just a few minutes to point out a couple of themes from the report that I think are worth highlighting. First of all, we think that the outlook for the European private equity market is looking good. Across Europe, economies are stabilizing, stock markets are recovering, and concerns about the sovereign debt crisis are easing, all of which are, of course, helping to kickstart deal-making. So we're predicting that 2014 could be a standout year for European private equity deals. Secondly, co-investments are a theme amongst many of the deals being done now. Institutions, sovereign wealth, pension funds, and family offices are keen to invest directly alongside private equity firms. Co-investments offer investors, of course, a chance to reduce fees, spread risks, as well as picking the deals that they like, rather than just investing from a blind pool fund. Our report, for example, identified that the number of family offices actively investing in private equity climbed by nearly 30% during 2013. So moving towards the Nordic region. I'm sure that everyone has noticed the positive spin, if I can use that word, in the Nordic region in the last year or so. And during the crisis, the Nordic region has been the best performing private equity region due to a number of factors, some of which are that the Nordics offer a stable climate for private equity, and of course that firms have been operating in this region for a very long time. In addition to that, our report shows that good governance and transparency has helped shield local private equity houses from the volatility that have hit the rest of Europe. And looking back, it's clear that the Nordic private equity funds see the strongest returns in Europe, an average 5-year IRR of 13%. Which leads me to my next point. These returns and stability in the market make the Nordics interesting for foreign investors, perhaps especially from the US, where the economy has recovered quickly. While our market may still be dominated by deals from domestic firms, cross-border transactions are definitely on the rise. In 2008, we saw only 17 cross-border buyouts, and that was not even a third of the domestic deals that closed. 2013, cross-border deal volume had doubled to 34, which was more than half of the number of the 54 domestic deals. And further on, if we look at briefly at particular sectors, pharma and TMT has been a strong dominant investment in the Nordics. These sectors accounted for a 62% share of the total exit value in the Nordics 2013. However, investors are also seeing opportunities in industrial and chemicals, agriculture, and in the consumer sectors more and more. So finally, our report showed that during the last 2 years, it's worth mentioning that the Nordic private equity firms have been more focused on exits, moving to cash in on some of the solid deals that they did and they needed to keep through the credit crunch. They did before, needed to keep them through the credit crunch. So exit volumes in 2012 and 2013 were more than double the level in 2009. So I think it can be said that a lot of companies that matured under private equity ownership have done very well on exit recently through IPOs and, of course, private deals, some of which are bilaterally negotiated deals. In Europe, we can conclude that IPOs are up 350% during the first quarter of 2014 compared to the same period last year. So right now, and perhaps I should be cautious and stress that I mean that literally, we can all agree that the IPO window is truly open, and hopefully we can expect more to come. But to conclude, the report shows that the European market is showing strong signs of recovery, and the Nordic region has been in the forefront of that trend. So, although not all private equity deals waiting to be made in the Nordic region will be covered in gold, we believe that these are exciting times to be doing business in our region, and I look forward to hearing our panel discussions this morning.